You are checking out this video because you are interested in assumable mortgages. You are looking at the rates that are out there today and looking at 6.5, 7, even up to as far as 8 with down payment assistance. And that's just not working for you. It's putting you in a payment either you don't like, or it's not allowing you to get the house or the size of house in the city you want. So you're checking out this video to look at something different. We're going to jump into it right after this. Hey, I'm Gary Meek. I'm with the Living in Sacramento team, and we're going to be sharing with you today how you can find out an assumable mortgage, find out how they work, where they are, and who has them. So there are assumable mortgages out there. Usually they are VA and FHA. Now, even if you're not a veteran, you can assume a VA loan. You've just got to find a veteran that wants to allow you to assume it. Ultimately, once you assume a VA loan, you become the loan holder. But if you're not a veteran, the veteran that originally got that loan has some paperwork attached to that, which means they can't go get another veteran loan. So if they're moving out of area, they're being stationed somewhere else and they want to go buy in their next place, and they allow a non-veteran to assume their veteran loan, they cannot buy using their veteran benefit in the new place. So little caveat there, it is what it is. But FHA loans, that's the other one. So people bought houses a year, 2, 3 years ago, and they have these great interest rates, 2.5, 3.5, 3, 4, whatever it is, anything under 5 that saves you 1%, 2% from what today's are is going to be a great deal of savings for you. So you're going to be able to walk into that property with that loan and that interest rate after you've assumed it. Usually takes about 60 days, so it's a little bit longer process than the standard, getting a loan today, 21 to 30 days. If you've got a really, really slow loan processing team, it might be 45 days, but I'm seeing them done 21, 30 days, no problem. So this is a little bit longer. It is a 60-day process, but hey, that's really not that big a deal if you're going to be saving yourself literally hundreds and hundreds of dollars a month. I'm going to go ahead and jump in here and share my screen with you guys because I'm going to show you a mortgage calculator. So I use mortgagecalculator.org. It is a super basic mortgage calculator, and I want to show you guys two things. So we're going to jump into a $600,000 house, and we're going to say with 3% down is usually about 20 grand, right? And you'll see there, and we're going to put that at 7.25, roughly the rates of today. We got property taxes of 6,500, got PMI, we got homeowners insurance of about 1,200, no HOAs on this one. We're going to calculate that. And so if you see, if you're buying a $600,000 house and you put 3% down and you're at a 7.25 rate, you're paying almost $5,000 a month. Now, for a lot of people, they're trying to get into that first home. They're, being told by agents and other professionals, hey, buy now because there's going to be a little bit better inventory, and then you're going to refi when the rates go back down. Well, we don't know exactly when that's going to happen, and I'm not telling you someone else is wrong. I have told many people that the same thing. Hey, when the rates drop by 1%, you hit the refi button. So if we get a little special bump anywhere in the near future, we hit the 1% down, hit the refi button, and get your payment down considerable amount. But to get into a $600,000 house, and we put 20,000 down, I'm just going to use numbers this time, and I can get it to you at 4.25%. That's 3% less. All the rest of the numbers I'm going to make are exactly the same. $6,500 in taxes, 0.15, 1,200 for homeowners insurance. Look at the difference here. $3,400 payments, 241 in PMI, 20,000 down, 31. Your payments are going to drop because the PMI is going to fall off. And then I want you to also look at this, $328,000 in total interest paid. But if you look at the other loan, which, like I said, you may not have this forever, but that's $4,800. It drops off. You're putting 3% down. You're paying $847,000 in your payments and interest. That is a massive, massive number. Now, everything's going to fluctuate a little bit. I'm just trying to show the closest I can in a side-by-side comparison. So 7.25% interest rate on 600,000 with a 3% down. That's conventional loan. The mortgage insurance will drop off, or assume this FHA at oh, I said 3.25. Sorry, I'm going to make that 4.25 just because I didn't want it to be so drastic. So still $3,700 versus $4,800. I'm literally saving you $1,000 a month, and we're still saving you $400,000 in the interest paid if you're getting a 4.25. Now, yes, I can get stuff lower. It's possible. These are the things that not every real estate agent's going to tell you. Not everybody's going to show you how to do this. So if you are a buyer and you want to buy in today's market, it is super important that you know an agent that understands how this works. Like I said, whether you're doing an FHA or a VA, these are assumable. Now, another piece to consider is people have been in these properties. Another thing to consider is people have been in these properties sometimes for a couple of years. So they may have more than $20,000 in equity. They might have $100,000 in equity. So in order for you to be able to buy into that loan, you may need to get a second that eats up a ton of that equity position or helps buy you into that equity position. So you may need to get a 12% second for $100,000, right? So let's look at that scenario because I want to run everything by you guys. I want you guys to look at it, see it, feel it, understand it. So we talked about this. We know that if you buy in today's rate 7.25 for a $600,000 house, your payments are $4,854, and that is where we're at. So, well, let's say this. Let's say we get a $100,000 second. Oh, sorry. Yeah, the home value is 600. Sorry about that. We're going to do the loan amount is 100,000. Interest rate is going to be 12%. And luckily for us on this one, we don't have to pay the taxes again. There's no PMI, no insurance. Now we're going to amortize it over 30 years, and we're going to show what this calculation is. Now it's $1,000, right? So that's your second. Your second is $1,000 a month, but your first isn't a loan amount of $580. It's actually a loan amount of $500,000. So you got a interest rate of 4%. We do have to do all these other calculations. So now you calculate it and say, okay, well, now I've got a $3,200 payment and I've got this $1,000 payment. So I'm at $4,237, right? $4,237 is not a bad deal when we had $4,800. So you're still saving $600 a month. Coming in with the same $20,000, you're getting the first, you're getting this, you're assuming the first, you're taking over the second. I'm sorry, you're assuming the first. So on this one, remember, you're assuming the first, and then you're getting a second loan. So we have to get a loan officer to take care of that second loan. There's lots of companies out there that do them. So you have to figure out which one's going to work best for you guys. So you've got a couple of choices. Now, the other thing is this. What happens when the interest rates drop to 5%? Well, you have to then look at your averages and say, hey, maybe it makes sense to refinance, even if I do a $600,000 property and a $600,000 loan, and I have to do it at 5% because my overall payment is $4,100. So whether you bought the house at 600,000 with the super high rate of 7.25 and you kind of wrote it out, you're paying $4,800 for however long that was. And now the rates dip, you get that 5%, 5.25, and you refi, cool, you get down into that lower payment. That's awesome, fantastic. But if you want to get into that lower payment right now, then you can look at doing an assumable, taking over that loan. Now, it's possible that you may have to do something like 20,000 down, and it's possible you might have to get that second mortgage to dial everything in. Nonetheless, this is an opportunity for you to assume a loan that is out there and available. You just have to find the right agent team that is working with these. So I'm Gary Meek. I'm with the Living in Sacramento team. If you would like to get more information, schedule a call with me down below. Schedule a call with myself or anybody on the team on where you're looking for, what city, what area, what payment you're looking for. And then we have a database of properties that will meet that criteria. Oftentimes we have a list of sellers that are thinking about selling, and we have some properties that are on the market currently. And then also we have those people that are in Citrus Heights or Antelope or Roseville, wherever you're looking. And we've got a list of maybe 100 people that have that property that kind of fits your criteria. We then call those people and say, hey, listen, have a buyer who's interested, looking in your area, haven't been able to find anything. I see that you guys have this property. Any chance you're thinking about selling? That's something we do for you guys. It is us going out and looking for properties for you. It is us truly serving our clients versus let's see what the MLS has. Let's see what's out there and available on the MLS, like most agents do. We are not like that. We are thinking differently. We are doing everything we can to be of service and a better service to our clients. If you're interested in hearing more, click on the description. Like I said, there is a chance for you to message us, DM, once again, like I said, in the links below, you can schedule an appointment with us right on our calendar. You can just message us saying, hey, here's what I'm looking for, city, state, not state. Right below, you can go ahead and tell us what kind of city you want to live in, what you want your house to look like, 3-bedroom, 2-bath. I need RV parking. I want a pool. I want this. I want that. You can give us the details and description of what you are looking for, but I also need you to include what is the payment you're looking for. Now, we have to be realistic in this. I tell a lot of people, if you want a $700,000 house with a 2% interest rate, I mean, it's out there. It does happen, but we got to be somewhat realistic. I'm not going to be able to find you something for $1,200, most likely in Roseville. So, like I said, put in there what you want for your monthly payment. We're going to give you a call. We'll say, hey, we have these 5 properties that kind of fall close to, and if any of those are interest to you, we'll get you set up to see them. And we look forward to working with you. Like I said, I'm Gary Meek with the Living in Sacramento team. We are here to help you. We are here thinking outside of the box to help and serve our clients. Hope you're having a great day. Thanks for watching. Take care.